go back to hard money loans, and we talk about the different types of hard money loans that there are, and what are some of the limitations. For example, some types of hard money loans are going to be better than other types of hard money loans for certain situations, or are available in some situations that other types of hard money loans may not be available, or other types of hard money lenders, depending on their source of capital and things like that. So Can you help us navigate the world of hard money loans from a perspective of, here are the different types. You've talked about a continuum, a spectrum of different types of hard money loans, different types of hard money lenders, and then what their each strengths and weaknesses might be.
Some of them have asset classes or types that are a non-starter versus what they specialize in, whatever those may be: land, owner-occupied, industrial, investment properties, etc. Some have geographical constraints where they'll only do downtown Los Angeles or space like that, as opposed to peripheral or totally tertiary markets, with populations in the below 10,000, and everywhere in between. Some of them have these credit constraints where they can only lend to people with a certain credit score, and none of the stuff we talked about before, BKs, judgments, tax liens, whatever sort of makes it a non-optimal or non-bankable scenario. Others, like I've said, sort of are able to kind of do a Gestalt approach. That's how I think of it anyway. They kind of look at competing factors and try to find a way to make the loan work. Where maybe the property is decent but not stellar, but there's some other stuff that they're able to point to here and say, well, this looks like a strong borrower. They've been there for a long time. They're committed to the space, and it's a space that is worth committing to. Just basically, I think most lenders do this, but try to find ways to make the deal work. A lot of lenders say, this is my box. And if you don't fit my box, I can't help you. And that's it. And that's the end of the conversation. Brokers, again, specialize as a rule, and everybody knows where they would like the loan to be placed, and that's usually the bank or a source like them, because they've got the cheapest money, except it doesn't often work for whatever reason. The things we just talked about, other stuff, the property itself. If it's income producing, it's not quite, it doesn't debt service at present, et cetera, et cetera, et cetera. And other lenders, are asked to and often can look at, the story and track record and character and kind of the other things that go into the mix and say, well, gee, it's marginal on the basis of the property itself, but this sways it more towards the yes as opposed to a no.